Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
My top pick is NVIDIA, and you may know that I just did this a month ago on July 10th. So why am I talking about NVIDIA again? Well, basically for the same reason I did back in July, that we've got earnings coming up August 23rd, and back then, the week of July 10th, I thought the street was underestimating, and investors in general were underestimating the potential for NVIDIA to deliver another beat and raise quarter. This is going to be their Q2. So it's basically the May, June, July quarter. So they're basically their July quarter. That demand from enterprises for these AI workhorses. And what do I mean by AI workhorses? Well, let's take a look at the piece I did for you in late June. NVIDIA DGX, the workhorse of AI that will drive NVIDIA to $2 trillion. And just find that, just search on, if you just type in the quote search box up here on DEX.com, if you type DGX, you should find this video. And this is where I go over in detail what a DGX box is and why, enterprises are demanding it. Remember, in late May, when Jensen Huang and company announced the new Grace Hopper platform, the latest advanced chip, and eight of these cards, basically that one of them fits inside of a shoebox, but 8 of them go in a DGX box, and enterprises need to buy them by the hundreds, if not the thousands. Remember, they built a supercomputer for Tesla a few years ago. So I just did my most recent write-up for NVIDIA was the bull of the day. This published on Monday. Sorry, my laptop's a little slow here loading this. But this is my latest update. Why I think that you're going to see another beat and raise and why the street's underestimating. Remember, when in the week of July 10th, NVIDIA was trading at like $425, and I said, yes, you can still buy it here because the street is underestimating what NVIDIA is going to deliver for this Q2. And they're going to beat and raise. So now the stock, and within a couple of days, the stock ramped to 475. New highs, maybe 480. And now it's come back. We're under 450, consolidating here. And the market's getting soft. NASDAQ got ahead of itself. Apple's come off. Microsoft's probably going to come off. NVIDIA's come off. So you're getting an opportunity here to buy NVIDIA. You got 2 weeks here before earnings on August 23rd. And, if you want to go out and buy some call options, $500, the 500 strike call options, you could do that. But long-term buyers should be buying NVIDIA because, as I say, this is going to be a $2 trillion stock, $2 trillion valuation within, not this year, not next year, within 3 years. So long-term buyers want to be buying NVIDIA. So why do I say that the street is underestimating? So we're going to go, I'll pull up we'll look at the detailed estimates here. And I'll just show you what I wrote in my Monday article, Bull of the Day, that even since July, the week of July 10th, how much have estimates gone up? Well, so I highlighted it here in this article. So we were looking at next year sales estimates of $55 billion, just under $55 billion. In just the past few weeks, estimates for next year have gone up another $2 billion, almost $2.5 billion, to over $57 billion for next year. Now, if we look at this year, estimates are not going up as fast. It's like the analysts are not sure what we're going to get for Q2, so they're not ramping as much. But and here's EPS for next year. And all that means that they're ramping next year. Here we go. Next year is going to go from EPS of 1019 to 1077, representing over 38% growth. The reason they're ramping next year is because they're certain that the powerhouse is going to continue. and the demand for these AI workhorses is going to continue. And because now every enterprise wants it. Remember, in May we learned that Google, Microsoft, and another large enterprise were all customers. Oh, Meta. What am I thinking? Google, Microsoft, and Meta were all customers for the new Grace Hopper platform. Well, if they are, that means, another 80% of the Fortune 1000 is too, because they want to crunch data and have their own chat GPT, just like these big companies. So if we just look at, here's NVIDIA, and back to a number one rank, NVIDIA, this is the reason it keeps gravitating back towards the Zacks number one rank, because analysts keep raising estimates. So let's just take a quick look at estimates, so we know what to expect on this beat and raise. There we go. So again, here we have this top line here. This is revenues. So last month, this year was only like $42.64 billion on the consensus. So they just tweaked it up a little bit, and EPS was, let's say, $7.50 or something, maybe a little lower, but but they're just barely tweaking. So I think that's where the beat and raise is going to surprise Wall Street there. And what we're expecting is like $11 billion. $11 billion for this quarter. I think it was Morgan Stanley has already moved up to like 11.35, and this is just about a week ago that they moved it higher. So, and that's not even in this high estimate yet. So here's next year, looking at $57.2 billion and 1077 on the EPS. I just think that if you get a chance to buy NVIDIA again at 425, make sure you do. And so that's why I keep talking about it ahead of earnings here. And that's my view, and that's why NVIDIA remains my top pick.
Thanks, Kevin. I'm Neena Mishra, and my top pick today is Caterpillar, ticker symbol CAT, which we know is the largest construction and mining equipment manufacturer globally. And its iconic yellow machines are used in so many sectors: infrastructure, construction, mining, oil and gas, transportation, etc. So that is why Caterpillar is considered to be a bellwether of the global economy. And we know that the global economy has been rebounding. The Fed doesn't expect a recession in the US. And the IMF also raised its estimates for global growth and the US growth recently. So the economy has been improving, and Caterpillar has benefited a lot from increased infrastructure spending in the US, and that is thanks in part to the $1 trillion infrastructure bill. So non-residential construction, which accounts for a majority of Caterpillar's revenue, that has been experiencing a surge in activity there. Many new projects underway for EV manufacturing, warehouses with rising digital e-commerce, and many factories, because many manufacturers are trying to bring back manufacturing back to the US because of the supply chain disruptions that they experienced in the aftermath of the pandemic. Now, its products, its construction products, their prices rose due to the rising costs, but it was able to pass on those rising costs due to higher demand. Now, the company reported excellent results last week. So let's take a look at the estimates by going to the quote page on Zacks.com. So Caterpillar, it's Zacks ranked number one strong buy stock as of now. And as I mentioned, it reported excellent results last week, beating on the top and bottom lines, and also offered excellent guidance. And because of that, shares went up almost 8% that day after reporting results. So you see the big earnings surprise here. And then you will see that analysts have been raising their estimates for the current year and next year have gone up significantly after that report. And that is why the stock has gone up to a Zacks rank number 1. Now, looking at the longer term price consensus and EPS price chart, you will see that the company has been doing well lately, not missing mostly positive surprises lately. Now, another reason why I like Caterpillar is because of its excellent dividend yield. And this is, in fact, dividend aristocrat. So that means that the company has been increasing its dividend for the past more than 25 years. So that is why it is included in the dividend S&P 500 dividend aristocrats index. Now, looking at the style scores, B for growth, C for value, but A for momentum. So overall, a style score of B. And the industry rank manufacturing is currently in the top 1%, 2 out of 250. And as I mentioned, the recent act is one of the reasons why there's a lot of manufacturing activity in the US. So because of the excellent industry rank and the Zacks rank of strong buy, the stock is worth a look.